All right, let's talk about the apartment market in Reading, Pennsylvania, specifically out in Berks County, because honestly, something weird is going on. On the surface, the market is sending out some seriously mixed signals. So let's dive in and try to make sense of it. Yeah, I'm calling this a market of contradictions for a reason. If you're a renter there, you're probably hearing that rents are going up, right? But at the same time, you might be driving around and noticing more for rent signs than you've seen in a while. It's kind of confusing to say the least. So this all leads us to the big question we're trying to answer today. Is this apartment market actually strong, or are we starting to see the first real signs of it weakening? And trust me, the answer isn't a simple yes or no. Okay, so here's the puzzle, laid out plain and simple. On the one hand, you've got a major sign of strength. Rent growth has been really solid, well above the national average. That tells you things are hot. But on the other hand, you've got a clear sign of weakness. The number of empty apartments is quietly creeping up. And that's the thing. Those two trends usually don't happen at the same time. It's like pressing the gas and the brake at the exact same moment. So to really get what's going on, we have to look past the spreadsheets for a second. Let's take a peek at what it's actually like to be in a Berks County apartment right now. So take a look at this. This right here is a perfect snapshot of what's changing the game in the area. These newer, modern buildings are popping up, and they are really reshaping what it means to be a renter there. You can just see it. They're clean, they're new, and they have the features that people are actually looking for these days. And what am I talking about? Well, it's all the things that have gone from a nice-to-have to pretty much a must-have for so many renters. You know, an in-unit washer and dryer, no more saving-up quarters, granite countertops, places that actually let you have a pet, modern kitchens with a dishwasher, and of course, air conditioning. This is the kind of package deal that's really pulling in new tenants. Okay, so this whole thing, it really boils down to that classic economic story, right? Supply and demand. To crack this puzzle of rising rents and rising vacancies, we've got to look at both sides of that coin. How many new apartments are being built, and how many people are actually looking to move into them? And before we go any further, let's just make sure we're on the same page with a key term here, the vacancy rate. All that means is the percentage of apartments that are sitting empty and are available for rent. And here's why it matters to you. When that rate goes up, renters get more choices, and landlords, well, they start to feel a little more pressure to compete for your business. So let's start with the supply side of the equation. In just the last 12 months, 78 brand new apartments were finished and hit the market in outlying Berks County. Now, that might not sound like a huge number, but for a specific area like this, that's a pretty big wave of new options becoming available all at once. Okay, so that's supply. Now, what about demand? In that exact same time frame, the market absorbed 44 new households. Absorbed is just a way of saying that 44 more families or individuals moved in than moved out. So people are still coming, which is great, but you see where this is going, right? Let's put those two numbers side by side and boom, here it is. This simple chart tells the whole story. We had 78 new apartments open up, but only 44 new renters to fill them. Let me put it another way. For roughly every 2 brand new apartments that became available, only 1 new renter actually showed up to sign a lease. This imbalance is the key. It's exactly why you can have more empty units at the same time that the asking price for rent is still high. Now, it is super important to understand what this means. This is not a story about demand drying up, not at all. People still want to move to the area. What this is a story about supply finally catching up. For years, there was a shortage. Now, new construction has not only met the demand, it's gotten just a little bit ahead of it. The market isn't breaking, it's just breathing again. So let's zoom out a bit. Why is this shift happening right now? To get the full picture, we've got to talk about the local economy and also tackle a really common myth about new apartment buildings. You've probably heard this one before, right? The idea that as soon as a fancy new luxury apartment building opens up down the street, the rent at every older building should just drop overnight. It sounds logical, but the reality is way more complicated. It's less like flipping a light switch and more like a slow ripple effect across a pond. It adds pressure for sure, but it doesn't instantly change prices everywhere. And remember when I said demand is still strong? Well, here's why. The Reading area has this really solid economic engine. You've got a strong, steady manufacturing base. You have a huge, booming logistics and distribution sector. I mean, think of all the warehouses along the major highways. Plus, you have massive employment anchors like the big healthcare systems. And the kicker, it's still a heck of a lot more affordable than Philly or other big cities nearby. That combo is a powerful magnet for people. I think this quote really says it all. The market isn't broken, it's rebalancing. It's not a crisis, it's actually a return to normal. Think about it. For years, you had all this pent-up demand, more people wanting apartments than there were apartments available. Now, finally, construction has delivered enough new homes to satisfy that demand. It's a correction, not a collapse. Okay, so we've gone through the what and the why. Now let's get to the most important part. What does all of this actually mean for you? Well, if you're a renter, the news is pretty good. It means you've got more choices when you're looking for a place. You don't have to feel that frantic pressure to sign a lease the second you see it. And yeah, you might find you have a little more power to negotiate when your lease is up for renewal. Now, for property owners and investors, the landscape is definitely shifting. Competition for good tenants is heating up, which means keeping your building and amenities top-notch is no longer optional. The days of automatic massive rent hikes are probably over for a while. It's time to adjust expectations to a more normal market. So here's the bottom line. The reading apartment market isn't collapsing, not even close. It's actually becoming more balanced, which is a good thing in the long run. This is a market that's starting to reward patience and smart decisions, and it's going to punish anyone who's still thinking it's 2021. And that leaves us with one last thing to chew on. As this market keeps settling into its new normal, where are the best opportunities going to be? Are they in those shiny new buildings with all the bells and whistles? Or is the real value going to be found in the classic, established apartments that have been the heart of the community for years? That, my friends, is the question that will define the next chapter of this market's story.